Hey guys, so in this video I will be doing an in-depth analysis of Delta stock. The symbol for Delta stock is DAL, and if you don't know what Delta is, they are one of the largest airlines in the United States. The other two large ones are American Airlines and United Airlines. If you're new to this channel, I make videos on the stock market and investing, so consider subscribing and let's get right into the video. One of the reasons that I love Delta stock is because they have a very strong balance sheet. This is super important for airlines because they're a very cyclical industry. It wasn't too long ago that many airlines were struggling and even going bankrupt, so it's good to see that Delta has a very strong balance sheet, which will hopefully protect them from something like this happening again. As you can see here, in Q1 of 2017, they had $8.8 billion in net debt and $6.9 billion in unfunded pensions. This means that they are relatively well positioned, and as you can see from the graph, they have also been significantly reducing the money that they owe since 2009. This is very important and has made them a much safer investment than they were in the past. Delta also has the goal of an under $4 billion net debt position by 2020. I think this is very achievable and will also make sure that Delta stays a very safe investment compared to where it was in the past and compared to other airlines. Delta's debt to EBITDA has significantly gone down since 2009 as well. Currently it is sitting at 0.8 times. This is very low and means that again, Delta is a lot more safe than it was in the past. Delta's CapEx also is significantly lower than the operating cash flow that they generate. This is very important because if Delta's operating cash flow were to go down, they would still be able to achieve all of the CapEx that they need. This makes Delta, again, a lot more safe than it was in the past. Here is a look at that same chart from 1997 to 2003. As you can see, their operating cash flow is significantly lower than their CapEx. This is when Delta was a lot more risky investment, and they struggled significantly during this time. Now, Delta has definitely improved their business quite significantly and should not run into the same problems that they ran into in the past. In addition to having a very strong balance sheet, Delta is a very well-run company. This is indicated by several metrics, the first of which being capital spending as a percent of operating cash flow. As you can see, Delta is the lowest of all of the other major airlines. This shows that they are running more efficiently than the other airlines, and additionally shows that Delta is a lot safer because their capital spending is not as much of their operating cash flow as the other airlines. Another way to tell that Delta is a very efficiently run airline is that their maintenance cost per seat block hour is significantly lower than any of the other major airlines. Delta is also committed to delivering non-fuel CASM growth of less than 2% per year. This is great because it means that Delta is keeping its costs low. Delta is also currently seeing strong PRASM growth, which is very important. We can also see that Delta is very efficient by looking at their ROA and ROE. Both of these are significantly higher than the airline industry average, which means that the company is using their equity and their assets more efficiently than the other airlines. They also have a significantly higher net margin than other airlines at 9.2%. This is great because it means they will be less affected if they need to slightly drop their prices or if fuel or something like that were to become more expensive. Another way to tell that Delta is a very well-run company is by looking at how well their customers are treated. As you can see, their completion factor is the highest of all other airlines, their missed bag ratio is significantly lower than any of the other airlines, and they are on time more than any of the other airlines. This means that not only is the airline being run well, but it is treating its customers well, which is very important for airlines to do. Delta is also a very shareholder-friendly company. This is important because it means that shareholders are going to be getting a lot higher returns than if the company was not shareholder-friendly. Delta has been aggressively raising their dividend since 2013. As you can see, they have gone from paying out $200 million in dividends in 2013 to $875 million in dividends in September of 2017. They have also been repurchasing a significant amount of their shares. They have repurchased 18% of their outstanding shares since 2013, and they have just authorized a new $5 billion share repurchase plan that will be completed by June 2020. As you can see, their shareholder returns as a percentage of free cash flows is very high. In 2016, they returned 81% of their free cash flow to shareholders through dividend and repurchases. This was up from only 17% in 2013. Delta also just recently increased their dividend by 50.6%. This gives them a forward yield of around 2.5%. This is very significant because it again affirms that they are committed to delivering strong shareholder returns, but it also shows that they are very confident in their future. Companies can't raise their dividend by 50% and then cut it later. Dividends are viewed by shareholders as a commitment from the company, and if the dividend were to be cut, a lot of shareholders would sell off their stock. This means that Delta is very convinced that they will have a strong future performance and will generate more than enough cash flow to cover this significant dividend increase. I believe that I have established that Delta is the best airline out there, in terms of stock and in terms of how they treat their customers. Because of this, Delta should trade at least the average price to earnings ratio of the airline industry. However, they do not. The airline industry has an average price to earnings ratio of 14.1. Delta has a price to earnings ratio of 9.8. This means that they are trading at a significant discount to the airline industry, even though they are a far superior stock than any of the other airlines. Here is a breakdown of Delta compared to the other airlines. As you can see, in terms of price to earnings, Delta is trading at an under 10 price to earnings, with American Airlines at 12.5, United Airlines at 8.65, and Southwest Airlines at 17. You can also see that the price to book for Delta is lower than all of the other stocks except for United Airlines. Delta also has a lower price to free cash flow than a lot of the other airlines. Delta has the highest dividend of all of the other airlines as well. This dividend has even been increased and will be up to 2.5% the next time they pay their dividend. Delta also has a lower debt to equity than all of the other airlines except for Southwest. They have a higher net profit margin than all of the other airlines except for Southwest, and they have a higher return on assets of all the airlines except for Southwest. They also have a very high return on investment when compared to all of the other airlines except for Southwest. Their return on equity is also very competitive. When looking at this, you can see that Southwest and Delta are clearly the two best run airlines. However, Southwest trades at a 17 price to earnings, with Delta trading at an under 10 price to earnings. So, while Southwest might be just as efficient as Delta, they are trading at a significantly higher valuation, which makes them not as attractive of a stock to buy as Delta. Delta also has a very solid moat. When I think of flying, I always think of Delta. I fly Delta myself personally. I also think that it is very difficult to start an airline because of the high capital that you need to invest at the start. This means that there won't be very many new airlines popping up to compete with Delta. This is always good. I also think that Delta has a strong moat because they have a lot of frequent flyer programs, which means that a lot of their customers need to be return customers, otherwise they will lose their accumulated miles. All of this gives Delta a relatively wide moat, which is very important when making a long-term investment. Despite Delta being what I believe to be the best airline stock that you could buy right now, there are still some risks associated with an investment in Delta. There are several Gulf Coast airlines, such as Emirates, which are significantly subsidized by their Middle Eastern governments. This allows them to compete with Delta very easily because Emirates doesn't need to turn a profit due to the high subsidies that it's receiving. This pretty much means that on some of their flight routes, Delta is needing to compete with a company that doesn't need to turn a profit. So far, I think Delta is doing a fine job of competing with them, but it will be something that you'll need to watch in the future to make sure that Delta isn't getting significantly hurt by these other subsidized airlines that don't need to turn a profit. Delta currently has a relatively high average fleet age at around 17 years. This is higher than most of the other airlines. I don't think this will be a problem for them though, because their high free cash flow and low capex will allow them to spend a little bit more on purchasing new planes and still generate significant free cash flow. I also think that this will end up being beneficial for them in the long run because the newer planes will be 20 to 25% more fuel efficient, which means that they will be a bit of an upfront investment, but they will significantly lower Delta's fuel costs in the future. This means that if they can properly execute the purchase of the new airplanes without raising their debt too much, they will become a safer company in the future because they will have less fuel costs. The final risk that I see for Delta would be a rise in oil prices. Airlines are very reliant on fuel, and it is one of their main expenses. This means that if oil prices go up, Delta's fuel expenses will go up with it. I don't think that this will be a huge problem because I don't see oil returning to $100 a barrel anytime soon. Delta also owns their own oil refinery, which helps them reduce the cost of the fuel that they use. I also like the idea of purchasing Delta in conjunction with an oil company. So this would be like purchasing Delta stock and purchasing ExxonMobil stock. This allows you to not be too exposed to oil prices. If oil prices go up, ExxonMobil stock will go up. If oil prices go up, then Delta stock will go down, which pretty much means that you will be relatively less exposed to oil prices than if you were to just own Delta or just own an oil company. In conclusion, I think that Delta Airlines is a great stock to buy right now. Their strong balance sheet, coupled with strong ability to generate free cash flow, as well as the fact that they are the most efficiently run airline but are trading at a significant discount to the airline industry, makes them a very attractive stock to buy right now. Thank you guys for watching. I hope you enjoyed my analysis of Delta Airlines stock. If you enjoyed this video, leave a like down below and consider subscribing. I make lots of videos on the stock market and investing. Also, leave a comment down below on your thoughts and opinions on Delta Airlines.